Hello everyone. So class 12 students accounts. In accounts I'm just going to explain to you the chapter on fundamentals of partnership. Let's proceed. First of all, meaning of partnership. Partnership is the relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. So partnership is when two or more persons come together with the motive to conduct a business so as to earn profit. If two or more persons come together with the motive of doing charity work, that would not come under partnership. Okay, in the definition it says a business carried on by all or any of them acting for all. So let's say if three partners, uh, A, B, and C are there, three of them contribute capital, and they decide that all three of them will be, opening the shop, sitting in the shop from morning till evening, and dealing with the customers, doing all the hard work. Means all the three of them are, active or working partners. Then that is also a partnership. And at times it can happen that suppose three partners X, Y, and Z are there. X and Y contribute the capital, but due to some reason they have their other assignments or other businesses, although they have become a partner with Z. So the job of managing the business on day-to-day basis, they tell Z to take care of the business on day-to-day basis, and they will be visiting the shop and occasionally. In this case, the partnership business of X, Y, and Z is being carried on not by all of them, but by one partner, that is Z, on behalf of X and Y as well. Let's proceed. Partners enter into a partnership agreement to form a partnership firm. Partnership business is the result of an agreement among the partners. Now, that agreement can be oral or written. As per the law, it's not compulsory to have a written partnership agreement, children, but it is always advisable or desirable to, have a partnership agreement in written form, so that in future there's no confusion, there are no disputes among the partners, because everything would be in black and white, that is in written. If any partner is confused in future about some issue, then they can always refer back to that written partnership deed. So now, what is a partnership deed? A written partnership agreement is called a partnership deed. Many students in the paper write, when the question is what is a partnership deed, they write the answer, a partnership agreement is a partnership deed, which is partially correct, which is not correct actually. So you have to specify the word written. A partnership agreement which is in written form is called a partnership deed. That means oral partnership agreement is not a deed. We cannot call it a partnership deed. It contains the terms and conditions on the basis of which a partnership business is to be conducted. So various terms and conditions, name of the partners, their addresses, many other things are there in a partnership deed. As we are doing accounts right now, I will focus only on those points which are relevant for accounting purpose and which are contained in this partnership deed. Let's proceed with the next slide. Important points in partnership deed for accounting purpose. There are 6 points particularly. The first one is interest on capital. Now, interest on capital is being provided to the partnership firm by the partners. So, in return, the partnership the partnership firm will pay interest on that capital to the partners. We'll be discussing this in detail. Number two is interest on drawings. As you know, children, drawings refer to the money withdrawn from a business by the owner. So during for personal use. So during the year, whatever money the partners withdraw for personal use from the business, that is called drawings. And in this case, interest will be charged by the business firm, by the partnership firm from the partners. Okay. Entries I'll be discussing afterwards. Let's discuss the third point: salary or commission to a partner. At times, a partner, he works extra. He provides extra services to the partnership firm. Therefore, apart from profit share, he would be provided a monthly salary. Okay, he'll be given salary for his extra work. Uh, uh, then commission to a partner can also be given when uh, basically a partner is acting as a marketing executive or sales executive of the business. There can be one of the partners who is very good in communication, and he's a go-getter. He meets people and gets business, gets orders for the partnership firm. So because of his extra efforts that he's making to increase the sales of the partnership firm, he's rewarded. He's given the incentive of commission as a percentage of whatever sales he makes. Point number 4, interest on loan borrowed from a partner. Children, at times the partnership firm can be in a situation where where the firm needs financial help. So uh, they can approach a bank for loan, but a lot of paperwork is involved. So it can happen that one of the partners is having the funds and he can provide easily without much of paperwork to the partnership firm. So when a partner gives money apart from capital to the firm in times of need as a loan, then the partnership firm has to give in return to that partner interest on that loan. Okay, and this is a compulsory payment. As per the law, the partnership firm has to pay this interest on loan every year, even during the year when the firm has suffered a loss. It's a compulsory payment which the firm has to make to the partner. That is interest on loan to a partner, the loan which was borrowed from a partner. Fifth point is about rent allowed to a partner. This would happen, children, when three four friends or brothers, 3 4 friends got together and formed a partnership firm, and let's say they were looking for a place to set up their office or a shop, and one of the they thought that one of the partners is having his property near the market, and that's a prominent place. So what happened, they decided that why to take a place on rent from someone else when one of them is having a good property in the prominent market. So what happens, a part of the property of that partner is taken from that partner for partnership purpose, for the partnership business purpose. In this case, they will not take undue advantage of that partner by not paying anything in return, but they will they will decide about how much rent has to be paid to that partner for the use of his premises by the partnership firm for the business purpose. Okay, this again is a compulsory payment. Partnership firm will have to pay this rent to the partner every year, whether the firm has loss or profit. In the case of profit, the rent will be given. In the case of loss also, during a particular year, the firm suffered a loss. In that during at the end of that year also, rent will be paid for that year to the partner. And last is profit sharing ratio. Don't think that profits are divided equally among the partners. Many students have this notion, but this is wrong. They will be given in the question profit sharing ratio. Okay, it could be, suppose two partners are there. It is not always 1:1. It could be 3:2, 4:1, or whatever is given in the question. So we'll divide the profit and that particular ratio. We move on with the next slide. Now, let me tell you, final accounts of a partnership firm comprise of what? You are in class 12th. I mean, in previous class, that is class 11th, you must have done final accounts of a sole trader firm, which comprise of trading account, profit and loss account, and balance sheet. Trading account gives you gross profit, which you transfer to profit and loss account. Profit and loss account gives you net profit, which you transfer to the capital account in the balance sheet. But here in partnership firm, you make trading account, you make P&L account, profit and loss account, but after profit and loss account, you don't straight away make balance sheet, but before the balance sheet and after profit and loss account, as you can see the third point in bold, you have to prepare profit and loss appropriation account, children. The word appropriation means division or distribution. Okay, so see, trading account gives you gross profit, which you transfer to profit and loss account. Profit and loss account gives you net profit, which you transfer to profit and loss appropriation account, so that you can divide this net profit among the partners. But you know, in profit and loss appropriation account, we will also pass the entries for various adjustments which I just discussed in the previous slide. That was about interest on capital, interest on drawings, salary or commission, etc. So as you can see at the bottom, after point number 4, after balance sheet, what have I written? I have given you the meaning of profit and loss appropriation account. So profit and loss appropriation account is prepared to divide the profit or loss among the partners and to give effect to the adjustments as per the partnership deed, which I just mentioned, in brackets I mentioned, that is interest on capital, interest on drawings, salary or commission to a partner. Okay, let's proceed with the next slide. Now I'll come to now interest on capital, the first point in partnership deed which I just mentioned. So children, interest on capital, what is it? Let's understand. The partners give capital to the partnership firm. You know business entity concept of accounting. Business entity concept of accounting says for accounting purpose, we have to keep the identity of the owner of the business, that is the partners, in this case, in this chapter, separate. The identity of the partners we have to keep separate from the identity of the partnership firm. So partner is providing capital to the firm, business firm. So in return, the partnership firm will have to pay interest on that capital to the partner. So because the partnership firm, we are doing accounting from the point of view of the business, that is the firm. So you have to think that the firm has to pay interest on capital to the partner. So for the firm, from the viewpoint of the business firm, from the viewpoint of the partnership firm, interest on capital is an expense at the at present. At this point of time, take it as an expense. As we go in detail, I'll tell you it's not expense, it's an appropriation. But for the time being, as we have started with the chapter, because the partnership firm has to pay interest on capital to the partners, whatever you have to pay is an expense. So for understanding this right now, we say that interest on capital is a business expense because firm has to pay this to the partner. Okay, so expenses come under nominal account. Nominal account rule says debit all expenses and losses. Therefore, because interest on capital is an expense, is a business expense, therefore interest on capital, as you can see, is debited here. We debit interest on capital account. And we don't pay this in cash. No. The partnership firm, the business, adds this interest on capital to the capital account of the partner. So you must have done the basic accounting rules in class 11th. There's a rule. To increase capital account, we credit it. To decrease capital account, we debit it. Now, because interest on capital is getting added on the partner's capital, what is happening to the capital? The capital account will increase. So to increase partner's capital account, we will credit it. So I have given the logic and reason in the brackets. See, interest on capital account debit. Why? The logic and reason is given in the brackets as it is a business expense. Then to partner's capital account. Partner's capital account has been credited. The logic and reason is to increase capital account because interest gets added on the partner's capital will increase. To increase it, we will credit it. Narration will be being interest on capital provided. Okay, then see, after this we have to pass the closing entry. Interest on capital which we have debited in the first entry, children, we have to close it by crediting it. So to interest on capital in the second entry, you can see I have credited. And to which account are we going to transfer this? We are going to transfer this to profit and loss appropriation account, so which I just discussed with you. So P&L appropriation account debit to interest on capital.